All right, welcome back, everyone. Today, we're going to roll up our sleeves and take a deep dive into Sansera Engineering Limited.
Oh, this should be interesting. They're a pretty fascinating company, especially now with everything going on in the automotive world.
Right, and we want to get a good grip on their recent performance, see where they're headed in the future. Thankfully, we've got their latest annual report.
Packed with visuals, too, I hear. Always a plus.
Absolutely. And to add some extra color, we've got snippets from their recent earnings call. So let's get down to business, shall we?
Let's do it. You know, it's amazing when you look at Sansera's journey. It really reflects how the entire auto industry has evolved over the years.
Okay, tell me more.
Well, they started back in 1981, right? Initially, it was all about passenger vehicles.
Makes sense, that's where the volume was.
Exactly. But then they expanded into two-wheelers, off-road vehicles, and even commercial vehicles. Now they're pushing beyond just automotive.
Mm-hmm. Like what?
Aerospace and defense, for one. And then there are these, what do they call them? Tech agnostic and XEV solutions. Buzzwords, maybe, but they're really trying to position themselves for the future.
Okay, so they're not just making parts anymore. They're thinking ahead. But before we get into all that, let's set the scene a bit. What's the industry overview?
Right, the big picture. Well, India wants to become a major force in global manufacturing, and Sansera is right in the thick of it. But you can't talk about them without understanding this larger context.
I'm all ears.
See, the whole global manufacturing landscape is shifting. We've got the rise of electric vehicles, obviously, EVs, hybrid vehicles, and this push for components that work across different technologies, going beyond just traditional engines.
I see. So it's about adapting to the new realities of the auto world.
Exactly. And then there's the whole aerospace and defense sector. It's booming thanks to government initiatives and advancements in technology. For Sansera, all this means a mix of challenges and some pretty exciting opportunities. It's a pivotal moment for them.
So how does Sansera fit into all of this? Where do they stand in the market?
They're a leading supplier of connecting rods globally, which is a big deal in the auto world. They're also the biggest domestic supplier in India for several other crucial components. And their reach is global. They supply to over 26 countries.
Wow, they've got a pretty broad reach then.
They do. But here's the key thing. Right now, 76% of their revenue comes from automotive. They're aiming to bring that down to 60%. That's their future strategy, not having all their eggs in one basket.
Makes sense, especially with all the changes happening in the auto industry.
Yeah.
Now let's talk about their recent financial performance. Their latest quarterly results show a 43.3% year-on-year growth in that tech-agnostic and XEV segment. That's got to be a positive sign.
It is. Those aren't just buzzwords. They're actual strategies playing out. This growth shows they're responding to what the market wants, and they're capitalizing on those new opportunities that are emerging. And their overall financials are solid, too.
Let's hear it. Give me the numbers.
Okay, so their EBITDA margin is a healthy 17.07%. Their PAT margin is 6.67%. And their return on capital employed, ROCE, is sitting at a strong 16.92%.
So what does all that mean for someone who's not a financial expert?
It means they're running a tight ship. Their operations are efficient, and all that growth is turning into actual profit. They're doing things right. That's
good to hear. But what about debt? Is that something to be concerned about?
Actually, their debt-to-equity ratio is getting better. It's down to 0.47 from 0.55 last year.
Okay, and what does that tell us?
It means they're not overly leveraged, they're managing their debt well. Think of it this way. A lower debt-to-equity ratio gives them more flexibility to invest in those future-focused areas like the XEV and aerospace we were talking about. They've got room to maneuver.
That's great to hear. All right, so the numbers look good, but who's behind all of this? Who are the brains of the operation?
Well, the chairman and managing director is S. Sekharvasan. And get this, he's been with Sansera since the very beginning. We're talking over 43 years of experience.
Wow, talk about dedication. That's impressive.
Right. It shows real stability, a clear vision for the company. He's not just riding the waves, he's charting the course.
And it sounds like they're backing up their words with actions. What about this recent investment in MMR-FIC Technology Private Limited? What's the story there?
Remember how we talked about Sansera diversifying the revenue streams? This investment is a concrete example of that strategy in action. MMR-FIC, they specialize in aerospace and defense components, which is exactly the sector Sansera wants to grow in.
So it's all connected, they've got a plan, and they're putting their money where their mouth is.
Exactly. They're not just talking the talk, they're walking the walk.
All right, so we've got a solid foundation, strong financials, experienced leadership, and a clear strategy. But let's be realistic, every business has risks, right? What potential roadblocks does Sansera acknowledge in their annual report?
They're pretty upfront about the challenges, which is a good sign in itself. They point out counterparty risk, which basically means potential issues with their financial commitments or customer contracts. Then there's procurement risk. That's all about disruptions in the supply chain or prices of raw materials going haywire.
Okay, so external factors that could throw them off course.
Right. Then they also acknowledge regulatory and legal risks. Changes in regulations, potential legal challenges, even environmental compliance issues. And of course, there's cybersecurity risk, which is a big one for any company these days.
So they got a lot on their plate, but it sounds like they're not just ignoring these risks.
Not at all. What's impressive is they don't just list them, they actually outline how they plan to mitigate them. Like with procurement risk, they're diversifying their suppliers, building strong relationships to secure that supply chain.
So they're thinking ahead, trying to be proactive.
Exactly. They're not just reactive, they're anticipating the bumps in the road and preparing for them. It's a thoughtful approach.
That's reassuring. Now let's switch gears a bit and talk about their future guidance, their strategies for moving forward. What's next for Sansera Engineering?
They're clearly embracing those Industry 4.0 technologies, smart manufacturing, data analytics, all that, even automation. They're even pioneering their own waste management technology. They call it the TrashBot.
Wow, that's pretty cool.
Right. It's not just talk, they're putting innovation into action. And they're also laser focused on growing their XEV business, aiming to increase its revenue share to 20%. And this isn't just about profits, they're weaving sustainability into their vision, pushing for renewable energy, circular economy practices.
That's a good sign. It shows they're thinking about the long term,
Yeah.
not just the bottom line.
Exactly. And they're not forgetting about their employees and their social responsibility either. They've got initiatives in education, health, and community development. It makes them a company you can actually feel good about, not just invest in.
All right, so we've laid some groundwork here. Strong financials, experienced leadership, a clear strategy, and a commitment to sustainability. It sounds like a good story so far.
It does. But now let's get down to the nitty-gritty. Let's take a closer look at their recent quarterly results and see what those numbers really tell us.
All right, let's dive in. Their consolidated statement of profit and loss should give us a good place to start. It breaks down their financial performance in detail.
Great. That's where we'll find the juicy details.
Okay, first things first. Their revenue from operations has jumped to $28,114 million. That's up from $23,460 million last year. That's a pretty big increase. What's driving that growth?
Well, if you look at their earnings call, they point to a few things. Increased demand for their products, for one. Then there's the successful execution of their strategy and those favorable market conditions we talked about. It's like everything's clicking for them right now.
They're hitting their stride. And their EBITDA has also gone up to $4,799 million, giving them a healthy margin of 17.07%, like you mentioned earlier.
Yep. And their PAT, their profit after tax, has also seen a significant jump. It's reached $1,875 million compared to $1,483 million last year. That translates to a PAT margin of 6.67%. These figures tell us they're not just growing, they're growing and making money while doing it.
Now, those are numbers investors like to see. But let's get specific. How are their different business segments doing?
Well, their annual report breaks down their sales mix, and there are some interesting trends there. Their automotive segments, motorcycles, passenger vehicles, commercial vehicles have all performed well. But as we've already discussed, it's their tech-agnostic and XEV segment that's the star performer, showing that whopping 43.3% year-on-year growth.
So they're not just riding the wave, they're actively shaping it. It's impressive.
Yeah.
But strong revenue and profit are only part of the story. What does their balance sheet look like? Any red flags there?
Actually, their balance sheet reveals a pretty healthy financial picture. Their total assets have reached $125,688.53 million, which is up from $22,432 million last year. This growth is fueled by a few factors: investments in new facilities, their acquisition of MMRFIC, and good old-fashioned expansion.
It sounds like they're in growth mode. And their debt-to-equity ratio, as we talked about earlier, is another positive sign.
Right. It indicates they're managing their debt responsibly. And while their current ratio has dipped a bit to 1.02, it's still within a healthy range, although it's something to keep an eye on.
Good point. It's always smart to look for those subtle shifts. Anything else in the balance sheet that stands out?
Well, their cash and cash equivalents have increased to $449.14 million. That's a strong cash position. It gives them more flexibility for future investments and strategic initiatives. They're not just surviving, they're thriving, and their cash flow reflects that.
Okay, so their financials are strong. But numbers only tell part of the story. Let's dive into the management discussion and analysis section of their annual report to really get into the heads of the people behind these numbers.
Sounds good to me. That section usually offers some valuable insights into how management sees the industry, their priorities, and their overall outlook for the future. It's where we get a glimpse into their thinking.
They start by acknowledging that the global economic environment is, well, challenging, right? Inflation, geopolitical uncertainties, all that. But they also emphasize the resilience of the Indian economy and their own confidence in navigating these headwinds.
That's crucial. They're not sugarcoating the challenges, but they're also emphasizing their ability to adapt and thrive in a dynamic environment. And remember, they've been around for over 40 years. They've weathered storms before.
They've seen it all. They also reiterate their commitment to diversifying their revenue streams, reducing their reliance on the automotive sector to 60%. This is clearly a big part of their strategy.
It's about building a more resilient business model, not putting all your eggs in one basket, so to speak. They're acknowledging that the auto industry is transforming, and they're adapting to that change head on.
Smart move. Now, their management discussion also highlights their focus on embracing those Industry 4.0 technologies we talked about earlier. It's about enhancing their operational efficiency and driving innovation.
And they're not just jumping on the bandwagon, they're strategically investing in smart manufacturing, data analytics, and automation across their plants. They're positioning themselves as leaders in tech adoption within their industry. They get it. Technology isn't just a tool, it's a differentiator in today's world.
They're using it to their advantage.
Yeah.
And it's not just about tech for tech's sake. They're also laser focused on building up their XEV business, aiming to grab a bigger chunk of that fast-growing market.
Again, they're not just talking, they're taking action. They point to their recent investment in MMR-FIC technology, that company specializing in aerospace and defense components, as a prime example of their strategic diversification. They're putting their money where their mouth is.
They're backing up their words with concrete actions. Now, every business has risks, and Sansera's management is upfront about that in their discussion. They identify several key risks, including counterparty risk, procurement risk, regulatory and legal risk, and cybersecurity risk.
Right, but what's important is that they're not just identifying these risks, they're actually outlining their strategies for mitigating them. It shows a proactive and thoughtful approach to addressing these potential challenges. They're not just hoping for the best, they're planning for the worst-case scenarios.
That's a sign of a well-managed company. So their management discussion shows a clear vision, a commitment to innovation, and a proactive approach to risk management. All good signs.
Absolutely. They're not just reacting to the market, they're shaping it. They're not just managing risks, they're turning them into opportunities. And they're not just talking about the future, they're building it.
All right, let's take a pause here and come back for part 2, where we'll take a closer look at the people behind Sansera Engineering, their leadership, and their vision for the future.
All right, so we've laid the groundwork. Strong foundation, solid financials, a clear vision for the future. Now let's take a closer look at the people behind Sansera Engineering. Who are the driving forces, the masterminds behind this success story?
Yeah, let's put some faces to the names. Their annual report actually provides a pretty detailed overview of their promoters and management team. And you can see they've assembled a strong, experienced team with a diverse range of skills and expertise.
Diversity is key. Different perspectives, different backgrounds, all coming together. It's a recipe for better decision-making.
Absolutely. And when you look at the top, we've got the chairman and managing director, S. Sakhar Vasan, a true veteran, over 43 years of experience at Sansera. That kind of tenure definitely brings a sense of stability, a deep understanding of the company's operations, and strategic direction.
43 years. Wow. He's practically seen it all, ridden the waves of change in the industry. But it's not just about experience, right? It's about vision. Vasan has clearly guided Sansera to not just survive, but to thrive in this ever-changing landscape.
He's the captain steering the ship.
Hmm.
And the annual report also highlights the qualifications and experience of the other members of the board of directors. It's a diverse group, which is always a good sign.
It is. Diverse boards tend to perform better. They bring a wider range of perspectives to the table, challenge each other's assumptions, and ultimately make better decisions.
Makes sense. And speaking of leadership, they also detail the recent appointment of Bindaganaval Raghunath Pritham as executive director and group CEO. He's coming in with a ton of experience from his previous role as group CEO, so I'm curious to see what he brings to the table.
New blood, new ideas. It'll be interesting to watch how this new leadership dynamic unfolds and what impact Pritham has on Sansera's strategy moving forward. It's a new chapter for them.
Definitely something to keep an eye on. Now, beyond the individuals, they also mentioned the formation of various board committees,
Hmm.
audit, nomination and remuneration, stakeholders relationship, corporate social responsibility, ESG, risk management. It's a pretty comprehensive list. It seems like they've got all their bases covered.
Those committees play a crucial role. They're all about ensuring good corporate governance, providing that specialized oversight in those key areas. Financial reporting, sustainability practices, you name it. It shows Sansera takes those responsibilities seriously, which is a good sign for investors. It builds trust and confidence.
Absolutely. Transparency and accountability are essential. Speaking of investors, the report also touches upon that recent strategic investment in MMRFIC Technology Private Limited, which we discussed earlier. It's a clear signal of their commitment to diversifying their business, moving into new, high-growth sectors.
Actions speak louder than words. They're not just talking about diversification, they're taking concrete steps to make it happen. This investment aligns perfectly with their goal of reducing their reliance on the automotive sector and tapping into those growing aerospace and defense industries.
It's all part of the master plan. Okay, so we've talked about their financials, their leadership, their strategic moves, but now let's flip the script and look at the other side of the coin. What about the potential risks? Sansera acknowledges these risks in their annual report in a pretty transparent way. They're not hiding anything.
That's a good sign. Transparency builds trust. Investors appreciate that. They've categorized the risks into four main types: counterparty risk, procurement risk, regulatory and legal risk, and the ever-present cybersecurity risk. Each of these poses unique challenges to their operations and financial performance. It's a complex world out there.
No business is immune to risk. So let's break down each of these, starting with counterparty risk. What exactly does that entail? What could it mean for Sansera?
Counterparty risk is basically the potential financial losses Sansera could face if one of their customers or suppliers fails to meet their contractual obligations. Imagine a major customer going bankrupt or delaying payments. That could have a ripple effect, impacting Sansera's revenue and cash flow.
It's a domino effect. One thing goes wrong, and it can trigger a chain reaction.
Exactly. So how do they mitigate this risk? They've implemented a robust credit risk management system. They conduct thorough due diligence on their customers and suppliers, keeping a close eye on their financial health, and they diversify their customer base to avoid becoming overly reliant on any single entity. Don't put all your eggs in one basket.
Smart move. Spreading the risk. Okay, let's move on to procurement risk. This seems particularly relevant given their reliance on that global network of suppliers for the raw materials and components.
You hit the nail on the head. Procurement risk is all about potential disruptions in that supply chain. It could be anything: natural disasters, geopolitical events, even a supplier going bankrupt. Any disruption in that network could have a knock-on effect on their production and their profitability.
The global supply chain is so interconnected these days. It's like a delicate web. So how are they addressing this potential vulnerability?
They've adopted a multi-pronged approach. They have those strategic partnerships with their key suppliers, right? Close relationships, reliable supply flow. They're also diversifying their supplier base, so they're not overly dependent on any single source. And they hold buffer inventory, just in case. Little insurance policy.
Always good to have a backup plan. Now, regulatory and legal risk. This one seems like it could be a real minefield for a global company like Sansera. So many different jurisdictions, so many rules and regulations to navigate.
It's a complex landscape. Regulatory and legal risk is all about those potential changes in laws and regulations, both in India and internationally. Think about things like emission standards, safety regulations, even trade policies. Any shift in those areas could force them to invest in new technologies, modify their products, or even face legal challenges, all of which can impact their costs and their competitiveness.
It's a constant game of catch-up. So how do they stay ahead of the curve on this one?
They've got a dedicated legal and compliance team that's constantly monitoring those evolving regulations, both domestically and internationally. They're also proactive in engaging with regulatory bodies, trying to have a voice in shaping those policies that impact their industry. It's not just about complying with the rules, it's about being part of the conversation.
That's a smart approach. Be proactive, not reactive. Okay, the final risk they highlight is cybersecurity. And this is something every company, big or small, has to worry about these days. It's a constant threat. What specific concerns does Sansera mention in this area?
Cybersecurity risk boils down to the potential damage from those cyber attacks, data breaches, system disruptions. Those threats are constantly evolving, becoming more sophisticated, and the consequences can be severe: financial losses, reputational damage, operational chaos. It's a real nightmare scenario.
It's a valid concern, especially for a company like Sansera that relies so heavily on digital technologies and data. So how are they protecting themselves?
They've implemented a comprehensive cybersecurity program, robust security infrastructure, regular security assessments, training their employees on cybersecurity best practices. They've even got a dedicated incident response team ready to jump into action if there's a breach. It's like a digital SWAT team.
Always good to be prepared.
Yep.
All right, we've talked about the risks they face, but what about the flip side, the opportunities? What does Sansera's future guidance and their strategies tell us about their ambitions?
They're clearly focused on growth, both organically and through strategic acquisitions. They're aiming to increase that revenue share from the high-growth XEV segment to 20%. And they're aggressively pursuing new orders for engine-agnostic components, including those for hybrid vehicles. It's a smart move, considering the global shift towards electric and hybrid mobility.
They're riding the wave of the future.
Exactly. They're also leveraging their expertise in forging and machining to target the growing aerospace and defense sectors. It's a natural extension of their capabilities, and they're well-positioned to capitalize on those opportunities.
They're branching out, but they're staying true to their core competencies. And they're not limiting themselves geographically either.
Nope, they're expanding their global footprint with a particular focus on the Indian market. That market is expected to see significant growth in manufacturing in the coming years.
They're playing to their home field advantage, but they're also thinking globally.
Exactly. And they're not just expanding horizontally, they're also going vertical, embracing those Industry 4.0 technologies, smart manufacturing, data analytics, automation. It's all about enhancing efficiency and innovation.
It's like a three-dimensional chess game.
Yeah.
They're making moves on multiple levels.
Precisely. They're combining their traditional strengths with those cutting-edge technologies to create a truly future-proof business. It's impressive to see.
All right, they've got a clear roadmap for growth, but what about the potential roadblocks? What challenges could they face in achieving those ambitious goals?
Well, let's be realistic. No business operates in a vacuum. The global economic environment is volatile. Geopolitical tensions could throw a wrench in their plans, and they're facing increasing competition. They can't afford to rest on their laurels.
It's a constant battle to stay ahead.
Exactly. And then there's the challenge of keeping pace with that rapid technological change, especially in the automotive sector. They need to constantly invest in R&D, constantly be on the lookout for the next big thing.
It's a never-ending race.
And let's not forget about the human factor, attracting and retaining top talent. That's crucial in any industry, but especially in a field like precision engineering. They need to create a work environment that fosters innovation and growth, a place where the best and brightest want to work.
It's not just about machines and technology. It's about people.
Yeah.
Creating that right culture, that's crucial.
Absolutely. So they've got some challenges ahead, no doubt. But they've also got a solid foundation, a capable management team, and a clear strategic vision.
They seem to be well-equipped to navigate those challenges and seize the opportunities.
They're not just reacting to the market, they're anticipating it. They're not just following trends, they're setting them. And they're not just building a company, they're building a future.
Okay, we've covered a lot of ground in this deep dive into Sansera Engineering. We've analyzed their industry, their business model, their financials, their leadership, their risks, and their strategies. It's a fascinating story of growth, innovation, and resilience.
And their commitment to sustainability. Don't forget that. They're not just focused on profits. They're also focused on doing business the right way. It's a company with a conscience.
Absolutely. Now let's take a moment to zoom in on some specifics from their financial statements. Sometimes those details reveal a lot about a company's operations.
It's all about reading between the lines, right? Looking for those hidden gems of insight. For example, their consolidated statement of profit and loss shows a significant drop in other income this year, which might seem counterintuitive, but it actually points to a strategic shift.
So less other income is a good thing. Explain that one to me.
In this case, it likely means they're relying less on non-core revenue streams, things like interest income or gains from investments. This aligns with their focus on strengthening those core manufacturing operations and diversifying into those high-growth segments we talked about. They're streamlining, becoming more focused.
So it's not about chasing every dollar. It's about focusing on what they do best.
Exactly. It's a sign of a company maturing, becoming more efficient. They're doubling down on their core competencies.
Makes sense. Now let's look at their expenses. Their operating expenses have increased to $123,316 million. That's up from 19,613 million last year. Is that a red flag?
Not necessarily. It's natural for operating expenses